Welcome back. You're still watching Business Incorporated on Channels Television. We'll head to the markets now. Well, the partially trading market with Anete Edet. Anete, we see you still have Tuesday's numbers, at least for most countries at this time. The holiday is really a time for traders to spend time with their family members.
Yes, Amy, I quite agree with you. Christmas is one of the best the best, according to one of the songs that says, is the most wonderful time of the year,
yeah.
of course. And then we journalists, we just have to do our jobs, which is
signed up for it,
exactly. We're essential service workers. The banks are closed, the discount houses are closed, financial markets are closed, but some of us are still doing our job. And take a look at our markets, the domestic market. It's still up about 36.29% year to date, and then at the same time, 4%. So now let's talk more about the market. It's not really news. This is the last close that we had on Tuesday. The market has been able, the domestic stock market has been able to cross back above the 100,000 points. And now at the last track here is 102,186.03 index points, which it had achieved at some point. The market had risen to about 106. And so far, it's still, last year we saw the market being 45% year-to-date performance, which was very, very impressive. And it's not too far from there, a little bit far, but so far the market is about 36.29%, which I just mentioned. And one of the reasons why this market was up is because of the MTN's positive impact, which was recorded on Monday, as well as on the Christmas Eve, which was on Tuesday. So far the markets will be looking forward to another Santa Claus rally. Santa Claus rally normally happens within the last trading days of the year and the first two in January. So we'll be looking out for a higher number when the market opens tomorrow, and then the final 2 days, two-day trading sessions for 2024 come on Monday and Tuesday next week. For the Johannesburg Stock Exchange, it was also a positive close. We're still tracking the numbers, 0.26% at 84,935.25 for that market. They were both closed for the Christmas break, which is yesterday, and still observing the extended Christmas break, Boxing Day. Okay, now let's turn to the other markets that we track on the African continent. The EGX 30, it's actually in session right now. At intraday, it was up 0.08%. 30,000, it's barely hanging to that 30,000 index number. It's been observing, recording a number of profit taking there, and it's not been able to cross into the 31,000 index level, still holding on to that number. While the Nairobi Stock Exchange All-Share Index, for the close of Tuesday's trading session, which is when all major markets around the world, particularly in this side of the continent, were closed, 0.18% in the red at 121.77 index point for that Nairobi Eastern African Market Index. Okay, so now from the equities market, we talk a little bit about the fixed income market. Yes, we know that we had it's been a holiday thin trading, so we didn't get to talk much about the fixed income market. We talked about the forex market, we talked about the equities market. So this time it's the turn of the fixed income market. And so for a review of just what happened for Monday, Tuesday, and then what to expect tomorrow, there's going to be a treasury bill auction. Let's talk to Bankole Odusoya, chief dealer with Polaris Bank. Thank you for joining us, Bankole.
Yes, how are you doing?
Oh, fine. And compliments of the season. I guess you're in the UK right now. So can you tell us, give us a little bit of a review of the last two trading sessions so far? How has investor sentiment been within this holiday thin trading week of Christmas?
Thank you very much, Anete. It's been a liquid end of the year. Federal allocations were pushed into the systems. And then we've seen a lot of influx also by interested parties coming in from foreign portfolio investors coming in to invest in some of our OMO bills as issued by the central bank. The central bank keeps issuing OMO not just to mop up liquidity, to tighten excess liquidity from system, but also to incentivize Naira holders such that they'll be discouraged from encouraged to hold Naira, and then discouraged from exchanging their current Naira to foreign currency. And we've seen some level of stability on the currency side. On the fixed income side, yields on treasury bills are still as high as 29%. We expect that to go on tomorrow as we have the auction, because there's an NTB auction tomorrow and it settles same day simply because we had holidays on Wednesday. Normally the bills auction would have had on Wednesday to settle today, Thursday, but because of the holidays, we'll have the auction tomorrow. Settlement also is tomorrow, so we expect yields to be around 29% effective. Discount remaining at around 22.5 levels. So, but basically, it's been very active market because of these very good yields on the fixed income side. The short end of the market, Treasury bills, is more active compared to promissory notes and FGM bonds, where we see more of monthly activities around the bonds auction. So there will be going into next year bonds auction. We'll get a calendar from the DMO, but for now, well, we're done for the year on bonds majorly. So it's just majorly we're left with Treasury bills auction going into next year.
Okay, so you say you're done with bonds, but we have just about 2 trading days left after we have that primary market, the Treasury bills auction tomorrow. What should we expect for Monday and Tuesday, which is going to be the final trading day of 2024 for the financial markets?
On the fixed income side, there will be more activities on the Nigerian Treasury bills space. We expect that once the auction closes around discount rate of 22.5, usually you'll see the rates trend down to around 21.5, 21.75, effective yield at about 28. So what's going to happen is that for those who lose out of the auction, also didn't have funds at the day of auction, they would have to stop by at the secondary market to trade. So you'll see margins being created by the winners at the auction, and then interested parties, some of them foreigners, coming into the auction. So usually when this happens, you also see some impact on the FX market because there will be some injection of FX by FBIs who are interested in picking up secondary market bills, and then it impacts on the yields, dragging down just a bit. So we expect more activities on Treasury bills for the last trading days of the market, and then a lot on the overnight interbank placement market also, where a lot of funds will be borrowed and placed by surplus units by banks who have excess monies to banks who probably are trying to shore up their position as they end the year. So basically, it's more short-term bookkeeping going into the end of the year, and then bonds actions will resume next year in the next few days.
Okay, Bankole, so before I let you go, in just 20 seconds, the markets will resume after that Tuesday close and observing the New Year break on Wednesday. What do you expect? How do you expect that the market will open for Thursday next week into 2025?
On the fixed income side, we've seen high yields continue to stay. The central bank governor has promised or giving forward guidance that in Q1 we're expecting tightening to continue as well, of course, because of what we have seen on inflation. Inflation uptick continues in Q1, so we expect tightening to continue. But on the FX side, we've seen stability already, especially since the introduction of the e-firms. There's a possibility that the parallel market where the BDC operators operate will get some more injection of liquidity when banks start selling to them. Of course, the central bank has announced that we're allowed to, but I believe there's a guideline that is being worked on that will, help up shape the operations of how we supply cash to the BDC. Because ordinarily in the last few years, they've been getting their cash from the central banks directly. And now, you have to talk of operations cost and the cost of insurance and, the operational guideline around delivering cash to the BDC. Once that happens, we expect rates on the parallel side to come closer to where we have rates at the Nigerian interbank space, where it's closer to 1,540, 1,550. So that's our expectation going into Q1 next year. High yields remain on the fixed income securities products. On the FX side, stability is expected to continue to range around 1,550 or even lower at 1,530, like we've seen in a few days in that we've traded in the FX markets.
Okay, thank you so much, Bankole. Of course, we look out for this, your projections and for that NTB auction to be carried out by the Central Bank at the Debt Management Office tomorrow. So thank you so much for your time on the show.
Thank you.